All right, if you've been anywhere near the housing market lately, you know mortgage rates have been, well, a total roller coaster. But what if I told you the tide might be turning, and maybe sooner than you think? We're going to break down the key signals that point to lower rates being right around the corner. And, more importantly, what it all means for you and that dream of owning a home. So, let's dive in. You know that feeling, right? You're ready to buy, you're searching online, but the numbers just don't add up. It is so frustrating. But hang in there because the economic landscape is shifting, and it could be opening up a real window of opportunity for a lot of us. So before we look forward, we've got to take a quick peek in the rearview mirror. Because calling the last year a roller coaster for mortgage rates, honestly, that might be an understatement. It's been a wild, wild ride. I mean, look at this. This timeline really tells the whole story. We started 2025 with rates over a jaw-dropping 7%, but then things started to change. The economy began to cool, the Fed made its moves, and we saw rates start to fall and fall, even hitting three-year lows, which brings us right here to today with the average 30-year loan sitting at a much friendlier 5.99%.
Okay, so rates have come down, which is great. But the big question everyone's asking is, how low can they go? Well, the answer really comes down to three key economic forces that are stirring the pot right now. Let's get into each one.
If you want to know what's coming next, these are the three things you need to watch like a hawk. What's happening with jobs, what's happening with inflation, and of course, what the Fed is going to do next. Think of this as our roadmap for the rest of our chat.
All right, first up, the job market. Now, this one might feel a little backwards, you know? We usually think a booming job market is great for everyone. But when it comes to mortgage rates, a little bit of a cool down can actually be a homebuyer's best friend.
And boom, we just got a huge signal from the latest jobs report. The unemployment rate just ticked up to 4.6%. Now that's the highest it's been in years. And believe me, that's not just some number on a spreadsheet. That's a big blinking red light on the Federal Reserve's dashboard, and you can bet they're paying super close attention.
So here's how that works. When more people are out of work, the whole economy slows down, right? So to get things moving again, the Fed steps in and cuts its main interest rate. Think of it like they're putting money on sale to encourage people and businesses to borrow and spend. And when it gets cheaper for banks to borrow money, they can turn around and offer you a cheaper mortgage. See how it connects?
Now for our second key, and it's a word we are all sick of hearing: inflation. We've all felt it everywhere, from the grocery store to the gas station, and it has a massive impact on mortgage rates too.
But here's the good news. We are finally seeing some real relief. The latest inflation reading came in at 2.7%. What this tells us is that the Fed's big plan to cool things down, well, it's actually working. And once inflation is under control, the Fed gets the green light to seriously consider cutting rates.
And you don't have to take my word for it. CBS News put it perfectly. A lower inflation rate often encourages additional Fed rate cuts, and that could be good news for home buyers. It really is that simple. Lower inflation usually leads to lower mortgage rates.
And that leads us straight to our third and final key: the Federal Reserve itself. You can kind of picture them as these high-wire artists. They're trying to balance on this tiny wire. On one side, they have to fight inflation. On the other, they have to make sure the economy doesn't slow down too much and tip into a recession. It's an incredibly delicate balancing act, and what they do next is absolutely crucial.
So naturally, everyone is looking ahead to the Fed's next meeting on January 28th. Right now, as you can see, the market is betting they'll just hold steady. But here's the thing you got to remember. That number can change in a flash. One surprising report on jobs or inflation, and those odds could completely flip.
And here's a little inside baseball for you. We don't even have to wait for the Fed to actually cut rates for mortgage rates to go down. Lenders are always trying to guess what the Fed is going to do next. So if the Fed so much as hints that a rate cut is coming, lenders will start lowering their rates now to compete for your business. In this world, the talk is almost as important as the action.
So we've talked a ton about the big economic picture: the Fed, inflation, jobs. But what does this really mean for your bank account? Let's zoom in and see just how much these little changes can affect your bottom line.
Okay, get ready for this number because it's kind of mind-blowing. The National Association of Home Builders found that a tiny little drop, just 0.25% in mortgage rates, can bring 1.1 million more families back into the housing market. That's not a typo. 1.1 million. That's how big of a deal these small shifts are.
Okay, so here it is, the million-dollar question, right? Do you jump in now and try to beat the rush of other buyers, or do you wait it out, gambling that rates could drop even lower? Honestly, there's no magic answer here. It's a personal, strategic call.
It all comes down to your finances, your life timeline, and what's actually happening on the ground in your specific neighborhood.
All right, we've covered a ton of info, so let's turn all this knowledge into an actual plan. Here's a simple game plan to help you navigate the next few weeks and get yourself in the absolute best position. And that position is all about being ready, which means getting pre-approved for a loan now so you can pounce when the moment is right.
So once you're pre-approved and ready, it's all about watching and waiting. Here are 3 things for your checklist. First, keep an eye on rates every single day. They're moving fast, and you might spot the perfect moment to lock one in. Second, get out your calendar and circle January 9th for the jobs report and January 13th for the inflation data. Those are the next big potential market movers. And finally, listen closely to what the Fed says on January 28th. That's going to set the tone for everything that follows.
So, as we wrap this up, let me just leave you with this one last thought to chew on. As borrowing gets cheaper and rates come down, a whole new challenge is going to pop up. The question might stop being, can I afford the loan? And start being, can I find the right house before 10 other people do? It's a brand new chapter in the housing market. And for anybody who's prepared, it is a chapter just filled with opportunity.